Hey people, I welcome you back to Caroline's Online Academy. We are in the series of videos in which I'm solving previous year board examination questions from the chapter Accounting for Share Capital. And now we are here with another question. And this is a question from compartment 2023, pro rata for feature and reissue question. CCL Ltd invited applications for issuing 75,000 equity shares of rupees 10 each. At a premium of rupees 3 per share, the amount was payable as follows: on application rupees 2 per share, on allotment rupees 6 per share, on first call rupees 3 per share, on second and final call the remaining amount. Applications for 1,20,000 shares were received, applications for 45,000 shares were rejected, and the excess application money was refunded. Full allotment was made to the remaining applicants. All money due were received except for Harish, a shareholder holding 2,000 shares, who failed to pay the first and second call money. Pass necessary journal entries for the above transactions in the books of the company. So this is actually a easy question because we don't even have pro rata allotment in this question. If you see, the company has received 1,20,000 applications, and out of that, 45,000 applications have been rejected, which means only 75,000 applications have been allotted, and they've been allotted 75,000 shares. So it's not like more applications were given less shares. It's like full allotment has been made on all the applications made by the shareholder. So it is 75,000 applications, and they've been allotted 75,000 shares, and it's not even pro rata allotment. Yes, calls and arrears. There is no forfeiture, there is no reissue. It's a very easy question, my dear children. In the books of CCL Limited, and this was asked as a 6-mark question in 2023 compartment examination. Journal. Let's let's put the heading: serial number, date, particulars, ledger folio, debit and credit. All right, so first is receiving application money. So journal entry is bank account debit to share application account as usual. Application money received. The company received 1,20,000 applications, and our application money per share was 2 rupees per share. So it's into 2, which is 2,40,000. And the next journal entry would be allotment. Share application account will be debited as usual. Share application account debit to share capital will be credited with the amount receivable as application money on the allotted shares. And the excess has to be refunded because we have rejected 45,000 shares. Understood? The share application is what? 1,20,000 into 2. Whatever the amount you receive, you just debit that in the second entry. And we have allotted only 75,000 shares, am I right? And application money receivable was 2 rupees per share. So 75,000 into 2 is 1,50,000. And bank account will be credited with the amount refunded, which is 45,000 applications were rejected, and the application money received on those 45,000 applications were refunded. So 45,000 into 2, which is 90,000. Understood or not, my dear children? It adds up to 2,40,000. We don't have any excess application money, as we have rejected all the extra applications and made full allotment for the remaining applicants. So there is no excess application money. So share application. Oh no. Shares allotted. Third journal entry would be to make allotment money due. Let's see how much is allotment money. Allotment money is 6 rupees, which includes a premium amount of rupees 3 per share. As you can see, premium is 3 per share, and allotment money includes premium, and therefore premium of 3 and capital of 3, totally 6 rupees on allotment. So we'll make the allotment money due. Share allotment account debit to share capital to securities premium account. allotment money made due. And that's how much, my dear children. On 75,000 shares, you're making 6 rupees due. So 75,000 into 6. That will be 75,000 into 6. What? 4,50,000. Out of this, 3 rupees is capital and 3 rupees is premium. So 75,000 into 3 will be credited to capital account and the remaining will be credited to premium account. The next thing to do would be to receive allotment money. If you see, all money was received except Harish holding 2,000 shares who failed to pay the first second call money, which means he had paid the allotment money. Am I right, my dear children? So there is no calls and arrears in allotment. So the journal entry for receiving the allotment money would be bank account debit to share allotment account. And that will be how much, my dear children? It will be the entire amount. There was no default by anyone. So the entire amount had been received. The next journal entry would be to make the first call due. Journal entry is share first call account debit to share capital account. Share first call has to be made due for how much, my dear children? It's 3 rupees per share. You'll also compute how much it is share second call. The total issue price of the share is 13. 10 rupee shares issued at a premium of 3. And on application, we received 2. On allotment, we received 6. And on first call, it's 3. So the amount receivable on second call will be 13 minus 11, 2 rupees. Anyway, now we are making first call due. So the first call amount is 3 rupees per share on the 75,000 shares into 3. So 75,000 into 3 is 2,25,000. So we did that. Next thing would be to receive the first call money, but there is a problem here. There is calls and arrears. One shareholder has defaulted. So calls and arrears account will also be debited. Calls and arrears account debit to share first call account. So what is the amount of money that was, what is the number of shares? They're given the number of shares. They've not even told the number of applications made by him. In any case, it will be the same in this question because it's full allotment. They've said Harish, a shareholder holding 2,000 shares, failed to pay the first call and the second call. Am I right? So 2,000 shares. First, we credit the call account with the entire amount that we made due. Then we compute the calls and arrears. It is 2,000 shares into 3 rupees per share that he did not pay. I mean, 3 is the amount that was made due per share. So 6,000. So the amount paid would be 2,25,000 minus 6,000, which is 2,19,000. Understood or not, my dear children? And we had worked out the second final call to be 2 rupees per share that we have to make due and receive. Let's do that. I'm just going to copy this because everything is same. Most of it is same. The numbers are obviously different. So I'm going to delete that. Delete this too. The journal entry to make share second call due will be share second call account debit to share capital account. And the journal entry to receive share second call will be to bank account debit. Calls and arrears because that person has not paid second call to. And share second call money received. And this will be what, my dear children? 7th journal entry and 8th journal entry. The amount that has to be made due on share second call is what, my dear children? It is the total number of shares allotted, which is 75,000 into second call money per share, which is 2 rupees. So 75,000 into 2, which is 1,50,000 rupees. And while receiving, we'll make the second call account, we'll credit the call account with the entire amount that we made due in the previous entry, which is 75,000 into 2, 1,50,000. Calls and arrears will be number of shares held by that person multiplied by the amount called up per share, which is 2. Here we don't have to do any working note because there is no excess application money as it's not a pro rata question. So we can just multiply the amount due with the number of shares held by the person defaulting the calls, and that will be 4,000. And the amount received therefore will be what, my dear children? It will be 1,50,000 minus the amount that was not received from the defaulter. So then paid, so that will be 4,000. And that's it, my dear children. There is no forfeiture, no reissue or anything. And that was the question that was asked in your board exam in compartment 2023 exam. And just that simple. With that, we have come to the end of this video. And just give me a second, I'll show you the answer for this question. All right, children, the answer is in front of you. As you can see, application money received is bank to equity share application 2 lakh 40, 2 lakh 40, and then everything is just the same. Whatever we did, it's the same thing. Understood or not, my dear children? So with that, we've come to the end of this video. Please do like, share, and subscribe if you liked it. And if you have any doubts or if you want to tell me something, please comment below the video. It would motivate me, although it has not been happening a lot till now. But anyway, let's just keep hoping that it will happen sometime. And that's it, my dear children. Take care, have fun, bye. We'll see you with another problem from another previous year question paper.